What's up, guys? Thanks for tuning in. So today we are taking a look at the Formation.Fi crypto token and trying to do our best due diligence to see if it has 100x potential. If you've been following the channel for a while, you know that we're going through these 100x cryptos with a fine-tooth comb, really trying to do our best to see if it has the potential to multiply in the near term. My name is Ryan. This is the No Autopilot YouTube channel, where you get content you won't get anywhere else on YouTube to this quality and this degree. If you can go ahead and do me a favor, if you enjoy the content, go ahead and hit that thumbs up button for me. It go a long way in showing the YouTube algorithm that this content is helpful. Also, if you want to go ahead and subscribe so you're in the loop anytime I post out some new content, that'd be awesome. And then finally, I want you to tell me in the comments down below, once you're finished watching the video, what do you think about Formation.Fi? I want to know if it's something you're adding into your portfolio or not, and why. Last thing, logistically, I went ahead and I provided timestamps in the description of the video down below, so you can go ahead and you can jump around to whatever part interests you the most, because there is a lot of content that we're going to be going over. So with Formation.Fi, what they're aiming to do is end the era of yield chasing. So if you followed cryptocurrency, you know that 2020, 2021 has all been about DeFi. People providing liquidity to a pool, getting these liquidity protocol tokens, being able to reinvest or stake those, and kind of create this whole spider web of DeFi where people are earning money. But the problem is that a lot of those aren't cross-chain, so you're dealing with all the Ethereum scalability and gas fee issues. There isn't any intelligence in terms of when to enter, when to exit those protocols, and for new investors, it's overall pretty darn confusing. So a lot of people have presumed that DeFi has kind of hit this pinnacle where we're waiting for that next evolution to push that market forward. And that is what Formation.Fi is aimed to do through something called risk parity. Now, risk parity was created by Ray Dalio. I'm sure many of you know who he is. If you don't, he's the creator of the world's largest hedge fund. So people give him money and expect him to invest it and make them more money off of it. And he charges a percentage to do so. Called Bridgewater Associates, where they managed up to $150 billion in assets under management. So he created this methodology called risk parity. Now, I'm going to go ahead and break this down for you. Let me know in the comments down below if it's confusing. I'll try and answer any questions I can. Now, typically, any asset, so the stock market as a whole, cryptocurrency as a whole, is going to generate more returns than just simply holding cash. So if you look at the traditional model where you put, let's say, 40% of your funds into bonds, something that's safe and reliable, you won't make a lot of money, but you won't get wrecked, earn a couple percentage points, and then you go ahead and you balance that out with the remaining 60% of your portfolio into equities, where you have the potential to have 10, 50, 100x type gains, as well as the potential to be wrecked if something were to go south. And so the two of those work together to create kind of a balanced portfolio. So with risk parity, the difference is again, the estimation is that cryptocurrency or the stock market are just going to continue to go up as they have historically. And so cash is kind of worthless. So what they do through the risk parity model is actually go ahead and they borrow money, which charges a small interest fee to be able to over leverage into aspects of the market. So in that example of risk parity, you go ahead and you have 120% that are into bonds, you have 30% that are into equities, and you've borrowed 50% that you've piled into those safe and relatively secure bond area where you're not likely to get wrecked and you're earning more interest than if you were just simply holding cash. So jumping back into Formation.Fi, what they've done is they've taken 3 strategies, hedge fund strategies, and brought them into crypto using risk parity. So you have Alpha, which you can imagine as like the brand new coin, the brand new exchange. It has the potential to 100x. It also has the potential to just burn into the ground. You have Beta, which is more like maybe your blue chip cryptocurrencies like Bitcoin and Ethereum. And then you have Gamma, which is more something along the lines of stable coins, where you're not going to make a lot of money, but again, you're not going to get wrecked or have a ton of risk. So what they've done is they've created these hedge fund strategies powered by AI, so it's always kind of making adjustments on the back end. As risk goes up, they'll rebalance. As risk goes down, they rebalance. That allows you to interact with any network, Cardano, Ethereum, Polkadot, and then be able to purchase and have access to any asset. And so for you, the user, it's intended to be a one-click buy, one-click sell type of approach. So really the vision here is that for you, it's super easy. You no longer have to jump through all these different hoops trying to engage with DeFi, and rather you just click here to buy in based on these risk portfolios. It'll go ahead and invest as well as manage your portfolio on an ongoing basis through Compound, Aave, DAI, Vesper, all these others that are listed on here. So the vision is simply click here to make money. We're going to access these dApps through infrastructure, and then they'll also be able to plug into L1 and L2 scaling solutions to find the cheapest and fastest possible route to execute these trades. So it really makes a lot of sense. Also, when we go ahead and we take a look at their backers, you know I'm a huge fan of seeing that venture capital has went ahead and felt comfortable enough with the protocol, with the founders, with the technology to go ahead and invest. Now, this isn't a silver bullet, but I like to see AU21 Capital. If you don't know, AU21 Capital was created by a gentleman who founded Gate.io, which is a cryptocurrency exchange, and they went ahead and created this venture capital fund to really fund some of those Asian-based cryptocurrency projects. So happy to see that they're on here. And when I went back and I looked at that initial seed round, another thing that really stood out to me was the fact that it was actually oversubscribed. Meaning, if they received more money than what they were asking for from investors. So let's say you have a cryptocurrency project, you're going to go out and you're going to talk to all these different people to raise some money. Say, hey, I need $2 million. And in their instance, they were able to overraise that to the tune of $3.3 million through this strategic round. Now, if we look at the token, it's trading around 25 cents, 26 cents. And DeFi as a whole, it has a ton of different protocols that are trading around the $100 mark plus. So there definitely is potential for it to 100x. So the next thing I like to look at is the tokenomics and just make sure I understand the supply of tokens, how they're distributed, the timelines associated with those. So there's going to be a total of 1 billion tokens with a 2% supply expansion per year after the 250 millionth form token is released. Now this is really important. If you're planning on investing in the form token, they're going to go ahead and they're going to take 30% of these form tokens and actually release them to users of their protocol as a reward for being an early adopter of the technology. And it's estimated that's going to happen after they go ahead and release their cross-chain capabilities around that 12-month time frame. So the protocol, I believe, was launched in June, so you're looking at from now to next June. Now, when we go ahead and we look at the distribution of tokens, I personally love to see that they have 25% going to the team. You need to keep those people incentivized to put in the hard work and effort that's going to be required to really build this thing out, market it, and get it listed on exchanges, all the ups and downs associated with the cryptocurrency market. So I like to see that these folks are fairly compensated. Now, for the form token, there's 3 different things you'll be able to do. One, you'll be able to use it in their DAO community for voting rights. So you'll be able to vote on different proposals that would affect Formation.Fi. In addition, you'll be able to actually stake your form token and earn, they're going to be distributing 50% of their protocol revenue to all stakers. So it allows you to get your little piece of the form pie if you go ahead and you stake your tokens. And then finally, you'll have access to a dark pool, which is a member-only price discovery liquidity pool. And the neat thing about that is it sounds like they're going to take some projects that are maybe flying underneath the radar but have some potential and open it up to the community to go ahead and invest kind of earlier than most other folks would be able to invest in the project. Next thing I'd like to look at is the distribution of tokens. If you've seen any of my other 100x videos, one thing I do not want to see is a token holder who owns over 10-15% of the tokens. And the thought process there is, let's say they have a 10x pump in price, that major whale can go ahead and dump their tokens and then bury all the suckers like you and me in the dust. Now, they're live on both Binance as well as Ethereum's blockchain. So if we look at Binance's, they have a 36% going to Pancake Swap. I'm okay with that. That's a decentralized exchange. When we go ahead, we hop over into Ether. They do have a handful of wallets that are over that threshold. Now, for me, this is kind of a red flag, and I don't know who owns these wallets or what they're for. So I would say this is kind of a risk factor if you're going to go ahead and invest in this protocol. I do think it's relatively common for these new projects. Again, this was launched in like May, June, to still be in the formation stage of divvying out their tokens to maybe some of those early investors. And that could clear this up a bit. But there are, it looks like 3-4 major whales in the ETH pool right now. Now we go ahead, we take a look at their social media presence. So they have 61,000 followers on Twitter. Their Telegram has like 36,000 members. I did find their CEO, their owner on Twitter, which is awesome. Again, if you watch my other videos, it's like a pet peeve of mine when these protocols exist and the founders don't put their face out there. Like, if you want me to invest my hard-earned money into your project, the least you could do is show me what your mug looks like. So anyway, I was able to find this gentleman. This is actually what he looks like in person here, as well as a handful of different interviews on YouTube that he's done over the last couple years. He's been in the cryptocurrency as a entrepreneur for a while, and happy to see there's a lot of content out there from this gentleman. Unfortunately, a lot of it is in a different language. I think he may be Polish, but regardless, I'm happy to see that he's out there front and center. Now, when we look at the token, where can you buy it? So it's currently available on Uniswap if you want to go ahead and do that. If you'd like to use a centralized exchange, it is also available on KuCoin. And you know I'm going to have my KuCoin link in the description down below if you want to go ahead and use that for referral purposes. And then wrapping it up here, so looking at their roadmap, so things to kind of keep an eye open for. So they're planning to launch Alpha, which if you remember, if we jump back here, that's kind of their most aggressive startup cryptocurrency project index in the third quarter of 2021, with beta launching the quarter after that and gamma the quarter after that. And as well as they have a handful of central exchange listings they're going to be working through. The other piece that's important to know is in the third quarter is the liquidity generation event. So typically, if you go ahead, you provide some liquidity to a protocol, they'll reward you in the form of tokens, which again, you can use to stake and have access to the dark pool. So wrapping this one up, I think this is a super interesting project. There's a lot in DeFi. There's a lot of money in DeFi. I think that they have made a couple different innovations here, right? So they're using that risk parity model that allows them to go ahead and better manage your overall cryptocurrency portfolio, probably better than you could do by just you doing it yourself. It's really simple, one click in, one click out. I like that the founders are front and center. The only thing about the tokenomics that really worried me was the distribution of holders in the Ether blockchain. Other than that, I think the roadmap looks pretty exciting. And for me, this is what I'm going to be adding into my portfolio. I'll probably go ahead and add this bad boy in once I wrap this video up, actually. So yeah, let me know what you think in the comments down below. My name is Ryan. This is the No Autopilot YouTube channel. Again, the only channel you'll be able to find this type of in-depth, thorough research on these up-and-coming cryptocurrency projects. If you want to go ahead and hit that subscribe button, that'd be awesome. YouTube's my full-time job, and the more likes and subscribes, man, that just does a lot to keep your channel nice and healthy. And then finally, let me know in the comments down below what your thoughts are. Are you buying it? Are you not buying it? Why not? And we'll see you in the next video.